Good evening and welcome to another episode of Poor vs. Standard. Poor here. As always, any information within these podcasts and YouTube videos is for entertainment purposes only, so please don't sue us. Don't do it, as we are not financial advisors. With that, we're going to get into it, and tonight we're going to talk about a stock that has been talked about by a lot of other people, and it's just after what we saw today, today being Monday, May 10th, which was a very bloody day for a lot of people, myself included. The markets were down significantly. SPY was down, S&P was down, Dow Jones was down. Yeah, so we're going to talk about one stock in particular that was down today, and at its current price point is very attractive. We're going to be talking about Palantir, and like it or hate it, this company, I mean, right now it's down to 1847, and it was after hours. It's down to 1808. So there you go. We're almost to in the 17s, and at that price, it's very interesting indeed. And so they have earnings coming out tomorrow morning, and that I don't think that's going to have a huge effect, even if they are 10 out of 10 earnings, stellar earnings, because that kind of stuff just doesn't matter right now, because institutional money isn't investing in these stocks. They're watching retail investors invest in these kinds of things, these favorite stocks of retail, and they're just holding their money on the sidelines and hoping these things come down. And a lot of people on Wall Street probably don't even really completely understand. I can't say that I completely understand their business model and how they work, but I'm going to try and give it my best go as to my explanation on what they do. So, this company, from what I can glean, is basically they use like artificial intelligence, machine learning, that sort of programming to basically data mine companies that hire them to figure out how they can best be suited to work and perform more efficiently. It saves companies tons of dollars on wasted capital, and also finding ways that the company is best able to use their own data for self-improvement. It's like a self-help book for companies, but it actually works. Like a digital Tony Robbins with a less punchable face. A lot of Wall Street, again, still doesn't understand the business, and they take umbrage with some of the clients that Palantir has. And they label Palantir as like a bad company because they have these government contracts, which, what? That doesn't really make sense to me, because government contracts don't make you a good or bad company. If anything, government contracts make you a trustworthy company because the government is not in the business of being screwed over. And not only does Palantir have a bunch of big contracts with a lot of different branches of government, they also have a bunch of big contracts with a lot of big companies. I mean, let's just take a look at what they did in the last month. Here. I mean, since the beginning of this year, the amount of contracts that they've had. I mean, let's take a look. We'll start with the most recent and work our way backwards. Palantir Technologies and the Royal Navy extend contracts. U.S. Coast Guard. Ringer extended a digital. It's another $89.9 million contract with the National Nuclear Security Administration. Palantir and I don't even know how to pronounce that one. 3M. Just, it goes on and on and on all the way up through the beginning of this year. Another $22.5 million contract. Japanese business. It's a lot. It's definitely a lot. And I mean, just in the last 5 months, they've done what many companies would take over a year to do, and it's growing like you wouldn't believe. And the contracts they are acquiring are massive. I mean, we saw one that was $89 million. Almost 90. The rate the company's growing and gaining partnerships makes this company massively undervalued in my opinion. And I mean, let's just segue right into the numbers. Let's take a look. I mean, you've got a market cap of $34.5 billion, roughly. It's a company this size with the contracts they have and the partnerships they have should be worth a lot more than 35 billion. I mean, you're talking at least I want to say close to a 10x at this point. This company should be worth maybe a third of $1 trillion, 350 billion roughly, and it's nowhere near that. And if it does that, then the stock price should be worth closer to like 180. No, some people have said that they see this company going to $1 trillion, and in the long term, I can absolutely see that being a thing, based on what they do and how many partners they have within their first year of going public. It's ridiculous to me how low they've gone, and some of it's, the market being down, but some of it's that they've been attacked, not so much shorted, but just a lot of companies are refusing to invest in them because they either don't understand them or they don't like who they partnered with. Which, your money, do with what you will, but this kind of company doesn't come around every day. Before they went public, they were working with a lot of different governments for 10 years, getting government contracts. I remember when they went public and how excited everyone was. They shot up. It hit 45 before they started coming back down. So, I guess we can get into the good, the bad, and the ugly with them. I mean, the good is that the company's been busting ass and acquiring contracts from governments around the world and big corporations, and just they're grabbing partnerships and contracts like it's going out of style. The growth rate on this company and their business model has been nothing short of stellar. I mean, they've been beaten down again and again and again with this market, but in a few short years, you're going to see this company be a beast, and very well, I can definitely see this thing being close to a 10x, if not more, in the next 5 years. Just based on the amount of contracts and works that they're doing right now. And just, take a look at some of their products. Like, they have 3 different products out right now. The start at the right-hand side with the Apollo program. The power of software as a service is SaaS. It's basically what they do. They're using software to serve companies in order to make companies better suited with what they already have. And that's basically what all these things are trying to do. Like their Gotham program, integrate, manage, secure, analyze all your enterprise data. So they basically take all of the data they can find on you once their programs are uploaded into your servers, and then it spits out a thing on how best to produce and cut corners, that kind of thing, to make them more efficient. I guess this kind of leads it into, what's to say that this company is the only kind of company in this space. And it's not. And that's kind of the bad part of the good, the bad, and the ugly. It's the bad is that there will be competition for Palantir. And the competition for this kind of thing will be fierce, because in the technology space, if you're not innovating, you will get outmaneuvered very quickly. However, Palantir does have the first mover advantage and a lot of contracts and a lot of connections and a contact list that is unparalleled. So the competition for Palantir does have a stiff road ahead of it, even if they want to take any market share from Palantir. So what the company actually does isn't well understood, which is kind of a downer for Palantir. It's not well understood by investors in Wall Street, so they're hesitant to invest, which I understand. If you don't understand something, why are you investing in it? That doesn't make sense to me either. So I get that, but I understand what Palantir is trying to do and how they're trying to go about it, and I will continue to research and make sure that I have the best grasp of this that I can. But yeah, right now, a lot of people are steering clear of it just because they don't understand it, and that's fine. So what am I going to be doing with this? I mean, I've I saw a couple interviews with this guy right here, their management. He's a little eccentric, and he's literally said to people, if you know, don't like our company, don't invest in it. We don't care. he's he's a character, that one, which is kind of fun. So it'll be interesting to see where this company is in the next 5-10 years. But what I'm doing with this company is I own roughly 150 shares, and I'm holding tight. And if it dips down below 18, I'm definitely going to be adding to my position. I'm going to buy shares, and I'll probably buy some leap calls into 2023, because there's no way that this stock is going to be under $25 in the year 2023. There's just no way. Unless they find out that this is entirely a fraud company, which I don't think they will, because they've been doing government contracts for like 10 years, so I wouldn't worry about that. This company has been around, it just is only now recently investable because they went public. So it is an established company, to be quite honest, and it's been doing work with governments. So, you know, confidentiality, that sort of thing, data leaks, probably not a big issue for these guys. So yeah, the company went public last year. Market cap $34.5 billion. Target price for the stock, I want to say you're probably going to see stock price over $100 within 3 to 5 years. It could be anywhere from 110 to that 180 that we discussed. So that's basically all I got for you right now. I like to keep these short and brief and just give you a basic overview. I know they call them deep delves, but I want to get some information to you so you can do your own research and hopefully figure out if it's a good investment for you. With that, thanks for stopping by, and good luck, trade well, be safe.